I've been preparing all weekend, getting ready to tell you to expect a big breakout from the stock market this week, and sure enough, I get in the office today and look at what the market's doing. I'm gonna tell you what's going on. This is your next Wise Step video for today, Monday. Thanks for being here. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. For your daily updates, if you're not a subscriber to this channel, hit that subscribe button, turn on notifications, smash that thumbs up button, and leave comments as well, because right now we're talking about what in the world is happening to the market. For about the past month, if you're watching the US stock market, the S&P 500, if you're watching it closely, and I hope you're not, but we've seen this action where it's been pretty volatile week to week, but it's been sort of converging in a very, very tight range. I mean, today is May 18th. It's pretty much going back to April 17th. So it's been converging in this volatile pattern, but it's been getting tighter and tighter and tighter. No one knows where the market's going to go at any given moment, but as I've been seeing this and was reading and doing some analysis over the weekend, I thought we're going to see probably a breakout in the market away from that pattern at some point this week. Will it break out up or will it break out down? We've seen a big breakout today on the upside. What does that mean? Is it sustainable? So here's the deal. Let me just give you a little bit of perspective before I tell you what your next wise step should be today. A little bit of perspective. Should we expect the breakout to be up or down? Well, today the breakout's been up. I don't know if it's sustainable, but the thing that concerns me about the breakout up is you never really know from day to day why the market's moving the way it is, but it seems as though things were surging from the get-go, because over the weekend the Fed was interviewed, I think 60 Minutes and so on, but the Fed chair basically came out and said this economy could be rougher, the recovery could be rougher than we anticipate. It might require a vaccine, but two very important things. Don't bet against the American economy long term, and the Fed still has a lot more tools, and we're going to be willing to do, and I'm paraphrasing, willing to do anything it takes to help support the American economy. To me, I think the stock market is surging based on that news, which is a little bit concerning, because now we've got phony economics where the market's not responding to actual economic events and what companies are actually forecasting, but instead the market's just responding saying the Fed's going to take care of us, so we might as well be risk on. Who really cares? I don't think that's sustainable long term, and that's what concerns me about the rally today. The other thing is apparently there was some positive results from a vaccine trial. We'll see. We'll see. On the negative side, though, if you're to expect a breakout down, if you look at the Warren Buffett, so over the weekend it came out, Warren Buffett is selling more stocks. He's holding a apparently significant amount of cash. If you look at the Buffett indicator, so this is a stock market indicator based on a certain ratio that Warren Buffett really relies on. It says the stock market is significantly overvalued. You had a couple of hedge fund managers come out last week. One of them said this is the second most overpriced stock market he's ever seen in his career. Even saw Mark Cuban, so big personality, saying, hey, the stock market's way too high right now. It is not priced into reality. Be very careful. And yeah, you do look and you say, well, the stock market has obviously went way down. It's come back up about almost halfway. And now we're just waiting for the economy to deliver something. It's delivering nothing but bad news. And yet the stock market is seeing a big surge today. So I do expect some sort of breakout in the stock market today or this week. Will it be breakout to the upside, continuing today's pattern, or breakout to the downside, possibly going back to retest those lows? I personally think there is more downside risk than there is upside potential right now, just because there's still so much uncertainty. But the wild card is you can't fight the Fed. And it's pretty much like the Fed has said, we'll take care of this. This time is different. It's a pandemic. This isn't just a normal economic cycle issue. And so we're going to take care of you. So I think there's more downside risk than upside potential, but it's hard to fight the Fed. What does this mean for you? Your investment strategy should be connected to your overall financial plan. If you felt the desire to override your overall investment strategy. Likely you're scratching your head right now saying things look awful and yet the stock market's recovered. Now what am I supposed to do? Number one, your investment strategy should be completely in sync with your overall financial plan, which means if you didn't need this money for a long time, hopefully you weren't making any changes. If you needed the money in the short term, you shouldn't have been in the stock market anyway. You're taking the right level of risk for your overall situation. I know that sounds boring. That's investing. That's how it's supposed to be. So that's number one. Make sure your investment strategy, your investment structure is connected to your overall financial plan. Two, make sure you're diversified. And I'm not saying make sure you've got a little bit of large cap, a little bit of small, a little bit of bonds, so on. Yes, you've got to make sure your eggs aren't all in the same basket, but you need multiple investing strategies, okay, to make sure that things aren't all moving in the same direction at the same time. Here at Korhorn Financial Group, we've got our index diversified model, don't overthink it, but then we complement that with our momentum strategy we call dynamic, that is looking around what has the most momentum right now and making sure that you're allocated into that. I have said, and I'll give you another update, that momentum strategy was completely in cash as of the end of February. At the end of business today, it will be mostly 85% back in the stock market. And pretty much all of that is US. Pretty much all of that is on the growth side. If I were to ask you what has momentum right now, you would say probably growth in technology. And that's it. That's where our momentum strategy completely is. It's positive a few percent year to date. The third thing that I would tell you is watch out for inherent risk. I don't have the percentages right in front of me. We're going to be hitting it on a future video, but if you look at the overall S&P 500, the 500 largest companies here in the US, it's a market cap weighted index, which means the biggest companies are the largest share of the S&P 500. So it's not each company gets 1/500th of an allocation in the S&P. It's based on their market cap. Well, the market cap is heavier, I believe, than it's ever been. We're going to quantify it and talk about it, but that means you're more susceptible to risks from Amazon and Google and Facebook and Microsoft, these enormous companies that if we're playing Monopoly, they've got pretty much all the money. That means the majority of the S&P is invested in just a couple of names, which means we're more susceptible to their risk. Those are the same names that have run up very quickly in this rally, and so you got to be watchful for those sorts of risks. So make sure your risk in investment structure is connected to your plan. Make sure you're diversified. But then lastly, really the message is don't take too much risk. Don't take more risk than you should, because the stock market, because of this overweighting, has a little bit more risk right now than it normally has. All of this needs to be in concert with your financial plan. Contact your certified financial planner right now to make sure you've got the right investment structure. If you don't have a CFP, or you're doing this on your own, or you're just using an automatic system, you can always contact our firm, Korhorn Financial Group, one of our team of advisors here. You can find us online, korhorn.com, that's Korhorn with a K, or send us an email. I know a few of you have, info@korhorn.com. All right, you're now ready. Go out and take your next wise step in your financial life.